Hello, hello. Can you hear me? Hi, everyone. We're getting things ready over here, and we'll be live in a minute or two. So stay with us, please.
Hello, everyone. Can you hear me?
Yeah, I can hear you.
Perfect. Finally.
Okay, everybody. Thanks for joining us. We will talk Bonk. We're gonna do a little bit of an intro. We're gonna talk about the vision and the reason for Bonk. We're gonna talk why Bonk is different. We're also gonna answer some community questions, and then we're also gonna tell you briefly what's gonna happen next in our nearest future. And I have a great pleasure today speaking with Delia. Delia, as you may know, is the CEO of Bonk. So, Delia, if you can please now unmute yourself and.
Hi, everyone. Nice meeting you all. I'm Delia. I think we met a few months ago, but at that time I had a really bad connections, and today started the same way. So I'm glad that finally that's behind us. So let me briefly reintroduce myself. So after spending 2 decades in the traditional finance world, starting in banking, consumer credit risk, then moving to investment management, working for BlackRock, and most recently for a global hedge fund, I decided to join the Bonk founders and build the self-sovereign financial ecosystem. This is an ecosystem where protocols, as well as the communities around them, the users that use those protocols and have those tokens, can borrow against their own native tokens without selling them. So that's briefly it about me. So I would say let's start addressing some of the questions posted by the community. And Mikhail, I think some of them we received questions on why Bonk is special and what differentiate us from the worlds of Aave and Compound. And I can take this question, and then later on we can talk a little bit about features and some other questions that we got. So
Yeah, definitely. Yeah.
Yeah. So at its core, Bonk offers, we all know, Bonk offers over collateralized lending with 0% interest rate. So we accept whitelisted collateral and we issue B Euro, which is a stable coin pegged to Euro. However, Bonk is built as the next generation of lending protocols that, in my view, in our view, it opens up the debt market to a wide variety of DeFi protocols, not only the blue chip ones, the ones that really can access the lending market right now.
Yeah, and honestly, it's not just the DeFi protocol. Right? Any Web3 native protocol or project that has a native token
correct.
Can potentially be whitelisted to the block.
Yes, correct. So that's kind of one of our kind of mission is allowing all those protocols that have native tokens to really be able to borrow against their own tokens and access those lending protocols. So besides the 0% lending, Bonk's true power really comes from unique features. And we talked about this last time. Those are kind of automated bots that we are going to implement on the platform. We have automated liquidations, but also something that we've been working over the last few months is this responsible risk management system. So in our view, the risk model is going to be the backbone of Bonk's long-term success. Why is that? Because it's going to allow us to be very different from other lending protocols and accept a wide range of collateral assets without adding stress to the overall lending protocol. So the main reason why other lending protocols don't actually accept a wide range of collateral is because they don't really have a risk control underneath that. So keep in mind that whitelisted tokens on the Bonk platform could affect the protocol and its stablecoin be euro at its core. So for us, it's crucial that we are going to build a robust and systematic risk model.
Yeah, and I guess maybe somebody with experience in hedge fund management could be a competent person to build such a model.
Yes, I mean, definitely kind of bringing some of this traditional finance into kind of the DeFi or blockchain space. Yeah, we can definitely learn a lot from those traditional finance risk management products. So on the other point that actually I want to talk about is kind of what are the type of solutions that Bonk actually provides, right? So we all know we have a lending protocol, 0% over collateralized, but what do you do with this? What are the solutions that all those DeFi protocols or other kind of protocols come and use? So over the last few months, we worked on building several self-sovereign solutions that will benefit, I would say, the entire kind of ecosystem.
So before we jump in, because we mentioned self-sovereign several times, but just very briefly, when we say self-sovereign finance, we mean that users who have their own assets don't need to interact or don't need any approval from anybody else, right? So I have my own assets. I can interact with the Bonk protocol without the need to borrow capital from anybody else because I have my own assets that I can use. And I also don't need anybody's approval because our solution is permissionless. And also, I don't have to give away my assets to anybody because the Bonk platform is non-custodial. So I only interact with my own set of troves that are smart contracts on the blockchain that nobody else has access to, right? So I think that's the big difference.
It's definitely big, and thank you for clarifying, because in also like one thing I want to add about the self-sovereign finance is that if you have an asset and you need some type of liquidity, you don't really have to sell that asset. You can actually borrow against that assets and get that type of liquidity. And right now, there are not a lot of products out there that allow you that, right? So the Bonk protocol, the way Mikhail you describe it, was like you have those type of assets. Initially, it's going to be crypto assets. Later on, we are going to expand into more kind of traditional type of assets. But users or even companies or protocols can come and borrow against their own assets to get that liquidity that they need. Now, what do they do with that liquidity? And this is kind of, those are the type of solutions that we are kind of try to bring to you to tell you exactly what we've been working on. And one of them is capitalizing a DAO treasury, right? So if you're thinking about a DAO treasury, most of the treasury is usually in native tokens, and they cannot access the debt, and especially when the debt comes at a very low interest rate or even 0% interest rate, the case of a Bonk protocol, it's a very cheap option for them to fill the treasury with the reserve assets that diversify that type of treasury or asset management. So unfortunately, currently, there is really only possible for larger DAOs whose native protocol tokens is highly liquid and accepted as a collateral asset on the major lending protocol to access this debt market. The majority of protocols cannot borrow against their own tokens, so they have to sell their tokens to access liquidity, and that puts selling pressure on their own tokens. They lose the governance voting power, and they lose the upside valuation when the market recovers, right? So using Bonk, those protocols, as well as the communities, again, around them, can whitelist their tokens and borrow against their tokens to access liquidity at a no recurring cost.
Yeah. So basically what you're saying is DAOs have to pay their bills, and they either sell tokens right now to get stable coins and exit to fiat, or they pay in their native tokens, but it doesn't really solve the problem because whoever is accepting payments in their native token, thanks to the first thing they have to do is to sell them as well. Right?
Yeah, and the other thing is actually is that it's a better for a DAO treasury to be diversified, to not to sit only on their native tokens. But on the other hand, you as a protocol, you believe in your own business, you believe in your own tokens, so you don't want to sell them in a bear market. So maybe you can just borrow against those tokens and diversify it into other reserve currencies like Bitcoin or ETH or BEuro, right? And everything can be done via a Bonk lending protocol. So it's one is kind of getting the assets and liabilities a little bit matched by paying your bills in fiat, right? So having that stable coin diversification in your treasury, that's one. And the second is really start and build a more diversified treasury that can actually protect you in down markets. Because if you have a native tokens and your whole treasury is in that native token, and that native token loses 80% of your value, your whole wealth goes down 80%. There is no diversification there, no risk management. So that's one solution. Again, we'll have different kind of space events for each solution later on. So right now, I just kind of want to kind of give you an idea of what we've been working on and the update. So another self-sovereign Bonk solution is allowing protocol to own their own liquidity on decentralized exchanges without selling any native tokens or highly incentivizing LPs to provide short-term liquidity. So we all know that the main problem in DeFi for the DeFi protocols or protocols in general is the liquidity. So if we take a simplest example, if there is no liquidity in a particular pair on Uniswap, you will not be able to make exchange in that pair, right? So you cannot really trade. If there is a liquidity, but very little, you will not be able to make the exchanges because it's going to be large price slippage that will prevent you from buying the asset at a market price. So you will end up paying exponentially higher for that. So the DeFi protocols have to highly incentivize LPs to provide liquidity, which is very expensive and is not sustainable because the second they will stop incentivizing that liquidity will disappear. So
basically what you're saying is in order to attract external liquidity, protocols now pay them rewards either in their native token or mostly in the native token, right? Which is again diluting their treasury and again it's putting sell pressure and short term, right? Because the moment those incentives stop, then the mercenary liquidity leaves the liquidity pool and they move on to another token that offers better incentives at given point in time.
That's correct, yes. So so our solution is that protocols can deposit their tokens into the Bonk lending protocol, borrow BEuro at no recurring cost, because remember it's a 0% lending protocol. The BEuro can be provided to any decentralized exchanges alongside with the protocol token, creating on-demand liquidity at a very low cost, since again BEuro carries 0% interest rate. So that's the solution that we are going to kind of to offer to most of the protocols out there that are seeking on-demand liquidity.
So basically, it sounds like a protocol-owned liquidity with basically zero recurring costs.
It's a protocol. It's way better than that, Mikhail. It's way better because, first of all, the protocols can actually keep their trading fees. They don't have to pay any interest or nothing for that second leg of the liquidity in the decentralized exchanges. And it can be on demand because all those protocols sit on tons of their native tokens. So they can actually mint BEuro anytime they need more liquidity, and they can provide that second leg of the liquidity right away into decentralized exchange. They control the flow. They control the demand. They keep all the trading fees. and they don't have to over incentivize anyone to provide that second leg of the liquidity. And the other thing is that B-Euro can be swapped for other stable coins or even the reserve crypto assets if they want kind of more diversified liquidity pools. So if they want native tokens versus another stable coin, in addition to the B-Euro, they can just swap the B-Euro against the other stable coin. So there is a little bit of diversification there that they can create.
Okay, sounds exciting. What else?
The last solution I would like to mention before moving kind of into a more practical question is the yield strategies. So Bonk will provide several yield opportunities for users who are staking B-Euro and BNQ, which is our utility token. And this is something that maybe, Mikhail, you can actually kind of talk a little bit more about kind of what are the opportunities, what are the staking opportunities you kind of design, because you are kind of the brain behind those.
Oh yeah, one of the brains behind it. Okay, I'll take it. Yeah, so just to remind everybody, Bonk will have two native tokens. One is called B-Euro, which stands for Bonk Euro, and this is the over-collateralized stable coin that is pegged to the euro. And the other token is called Bonk Utility Token, or BNQ in short. And this is a fixed supply utility token that is used to orchestrate the ecosystem, and it allows people to basically customize the features of the platform and receive cashbacks and also facilitate the governance process. So when we talk about the yield opportunities, well, first and foremost, I think one of the differentiators of Bonk compared to other lending platforms is that Bonk will have what we call a stability pool. And the stability pool is basically a pool of Bonk Euro that is used for liquidations that are happening on the platform, and is also used for arbitrage in order to keep the Bonk Euro peg as tight as possible. And the staking pool is going to be open to anybody who's holding Bonk Euro. And if users stake Bonk Euro in the stability pool, they get the benefit of participating in liquidations, which basically means that they're going to get all these collateral assets that from liquidated rows at a significant discount. They're also going to be giving the portion of the arbitrage fees that our Bonk arbitrage bot will generate on different liquidity pools in the centralized exchanges. And also we will be distributing BNQ tokens as rewards. And let's say earning those BNQ tokens gives the users the opportunity to take BNQ tokens, stake them, and when they stake BNQ tokens, well, first and foremost, they receive cashbacks. So basically, all the fees that are collected by the protocol will be channeled back to people staking BNQ in the form of cashback. And let's say the fact that it's a cashback means that it is not a form of passive income. So it's not like if somebody has a lot of BNQ, they're gonna put it in a contract, in a staking contract, and they're gonna start receiving dividends. Users actually have to use the platform, so generate fees inside the protocol and also take loans. And when this happens, then they will be able to offset those costs and this debt using those cashbacks, which I think is a pretty clever mechanism, because let's say if people have BNQ and they stake it, they basically can have a mechanism that automatically repays their BNQ loans. So
in other words, I mean, I can pay back my debt completely with the cashbacks, right?
Correct. Absolutely, yes. And I think yes, for the sake of brevity, we can say that there will be a lot of other yield opportunities on the Bonk platform. We're gonna definitely have a separate live events and separate explainers. But let's say what I just want to briefly point out to everybody is that the token economics of Bonk is sustainable. So we will not guarantee outrageous yields to anybody because everything is market driven. But because everything is market driven, everything is defined by the amount of economic activity happening on the platform, those yields will be sustainable, right? And we're talking about stablecoin that is actually over collateralized using high quality assets that are determined by the risk model. And the BNQ utility token is a token that has actual utility and actual benefit to the users. So yes. What else?
So I think one other thing that actually I want to talk about on my side is the risk management, because you mentioned about kind of those tokens, and the way we whitelist those tokens is if they pass through the risk model. So there are three different aspects of risk categories which are very critical in accepting a token as a collateral on the Bonk protocol. It's the fundamental risk, the technical risk, and the market risk. So the fundamental risk, it's looking at try to evaluate kind of the quality of the protocol, and it looks for potential design risks, which is more or less the token economics. It looks at the value that they offer, how useful the protocol is, what are the strengths and the weaknesses, and the competitive advantages. The technical risk, it looks...
With fundamentals, we also look at very basic stuff like who are the founders and are they anonymous, or are those people real behind the
correct, yes. So the technical risk, it's based on the smart contract, right? So it tries to look at the documentation, also looks at the stress test, verifies the audit reports. And the last one is the market risk score, which really tries to quantify the exogenous risks that occur when the crypto market are volatile, and they cause the collateral to fluctuate a lot. So now the fundamental and the technical risk category, those assessments are going to be carried out by the Bonk contributors. And they're going to use community templates and feedback, and they're going to be voted by the BonqDAO members. The market risk score, on the other hand, is computed automatically, is using on and off chain data, and is just going to be computed like real time, almost real time, or kind of block time. While both fundamental and the technical risk scores are used only to whitelist the new tokens, the market risk actually has a different feature. Is going to compute the minimum collateral ratio per token, as well as the borrowing capacity per token. That's more or less it with the risk management. We are going to have another version within the 3 or 6 months, and that version is going to kind of look at the overall lending protocol risk, which means that we are going to aggregate all the additional kind of token risks and whitelist them, and try to run several stress test analysis.
Yeah, and you mentioned BonqDAO, right? And you mentioned contributors. So I think it's a nice segue to address one of the community questions. People asked us about what's the FINMA approval status.
Correct.
And I think, yes, we can answer this by saying that we got a very, very good feedback from FINMA about what we're about to do. And the general, let's say, overall message was that we need to be much more decentralized than we originally thought. And this is why we're going to have a DAO. We're in the process of formally registering a DAO as a non-profit LLC on Marshall Islands, which legally recognizes DAOs as legal entities. We're going through this process. It comes with, let's say, an operation agreement that has to be registered with the government that defines the governance. So basically, we're going to do all the stuff that we were supposed to do as suggested by FINMA in order to have a truly decentralized governance structure. And this is why we will be able to have a transparent, decentralized process that will govern the protocol and manage the whitelisting process, and also, if things go wrong, a delisting process of tokens. But let's say this is why now we are marketing ourselves as BonqDAO. That's the reason. Is there anything to add on that front, Delia? Or?
No. I think, I think we definitely kind of go down that path of being completely decentralized. And the first step is allowing kind of the community to start voting on whitelisting the tokens. So who are we going to accept as tokens? So you'll hear from us soon, because we'll need kind of your opinion, your voice, and we'll need your collaboration in whitelisting those tokens.
When you say you don't mean me necessarily.
No, I don't either. No, it's not you. It's not you. It's the whole community that listens. Correct.
Yes. Well, definitely. So we're going to need a community to do two things for us, and let's say details will come on our social media soon. But one thing is going to be whitelisting tokens. So we would like to hear from our community any good suggestions about tokens that are worth whitelisting. Because when we launch, we're definitely going to launch with a very, very, very narrow selection of tokens. We're not going to mention anything specific today because it's still, let's say, not 100% finalized, but just to manage expectations. This is a completely new thing that we're doing. We want to minimize the complexity, minimize the risk as much as possible at launch. So the list of tokens will be super, super narrow, but definitely our vision is to have a very, very large ecosystem of quality tokens that are used as collateral. So we will ask our community members for some good tips. Maybe we're going to do some polls or some voting. And that's another thing that we're going to ask our community very soon is to finally test the platform on a testnet. We are, let's say, firmly committed to launching in November. So let's say in the coming days, we're going to announce the link to the deployment on testnet, and then we're going to encourage anybody to take a look, see if hopefully there will be no bugs that they will find, but maybe people will be able to share some feedback about the UI and the general feel and the user experience.
Yeah. So I think this is for us today. So you'll hear from us on social media. Please reach out to us. And we'll have several polls coming up over the next few days. And as Mikhail said, we are going to ask you for some feedback on UI. And yeah, we are aiming to launch in November. So let's do it together. Let's do it.
Excellent. Great.
Okay. Bye, everyone.
Thanks, everyone. Bye-bye.